Tuesday, May 9th, 2023, Monaco 64, home of alternative economics and contrarian views. Yes, I've got Rudy here today. He's wiggling about. He wants to get down off the sofa, but I just wanted you guys to see him a little bit. But anyway, more to more serious things. Deflation or hyperinflation, that's what always been a big debate, even amongst people that are believers in sound money, even people in the alternative space, like I would say I am here on YouTube, and even many years ago with colleagues at work. One of my good colleagues that I got converted into sound money, a guy that started buying gold as well. He always used to think that we end up in a deflationary collapse. And I'm here to repeat that I think we're going to go into hyperinflation. Yes, there might be deflationary events along the way, like we had in 2008, like we had in Europe in 2011, 2012 with the sovereign debt crisis, like we had in 2019, 2020 with the repo crisis, which they conveniently called a pandemic, right? And now with the banking crisis that we're having, these are all deflationary events. And unfortunately, I think unfortunately, or just the reality is that the central bankers and politicians, they don't know any better. They don't understand sound money, gold or silver. And the only thing they'll be able to do, or that they will do, is keep inflating. And we're going to look at some of the headlines that makes me believe that. And I'm also going to recommend a book that has helped me navigate this debate and the system for the last 20 years or so. Before I start, here he is, Rudy. Today we have puppy training classes. Last week, I forgot to let you know, he won a contest at the puppy training class. So he did really well. He won a free bag of treats. He won the musical sits contest. And how does that work? Well, we were walking around in the square. We couldn't get out of the square. And the trainer had some music on. And every time she stopped the music, the dog had to sit. You had to tell your dog to sit. The last dog to sit would be out. And there were about 7 dogs. And Rudy was the last one standing there, the last one sitting. So he won the contest. Just wanted to let you know that. So he's doing really well, despite the fact that he was digging again yesterday in the garden. We had to put some cayenne pepper on the flower bed. I think that will stop him. So before I look into these headlines that make me believe, and also the actions that we've seen in the last 6 to 7 months from central bankers, I'm going to recommend a book that I've recommended many times. I'm sorry to my old subscribers, but new subscribers need to know about this, and new viewers. And if you are new to the channel, you're watching my videos and haven't subscribed yet, make sure you do. He wants to go down. There you go, Rudy. So the book is Fiat Money Inflation in France, How It Came, What It Brought, and How It Ended, by Andrew Dixon White. And why is this book important? Well, because it talks about the experiment that the French had in the 1790s in revolutionary France. It started in 1790, and France at the time had the same problems we have, not just in the UK or in the US, in the West. What did France have? Well, it had massive debts. The economy wasn't doing well. You had massive wealth inequality. You had political mayhem, of course. with the French Revolution and all the all the mayhem that it brought. You had a lot of change, just like we're having today, and they decided, the National Assembly in France, to issue paper money, which at the time was something that they were very reticent about doing. And why is that? Well, because the past showed that it always fails. They had the Mississippi bubble in the 1720s. The memory was fresh of that failure. But they convinced themselves, the French, that they could do it because they would back this assignat, this paper currency, with the lands of the church that had been confiscated, and that they would only do one issue to kickstart the economy. Does that sound familiar? So Keynesian economics is nothing really new. The French were trying it back in the 1790s. And yes, so what happened? And I'm going to put a link, a free PDF link for you to read this if you want. It's not a long book, as you can see. So basically what happened is that they did the first issue of the assignats. The economy picked up, but eventually things fell back. The debt was still there. Business was not picking up. So they decided to do just one more to kickstart again. So you get the idea. They kept doing, and by the end, by 1796, they tried something else called the mandats. That failed, and yes, it took 6 years. I guess now it's taking, how long is it taking? Since 2008, I would say, because that's what they've been doing. The experiment with QE is money printing, and it doesn't seem to get any better, and we keep getting crises. And every time they restart QE is the new issue. And eventually it ends in the destruction of the economy, of the currency. And the interesting thing is that all the symptoms, societal, economic symptoms that we have today happened in France as well. So, you know, the more things change, the more they become the same, as the French would say. So back then you had, as I said, a lot of wealth inequality. The rich were really rich. There's a lot of gambling and speculation because it didn't pay to produce things, because the currency was becoming worth less and less. Yes, farmers and people in the countryside were ostracized. They were called profiteers. And it's the same thing happening, I would say, nowadays with like the energy companies and people blaming businesses making profits for inflation, which is another fallacy that I wanted to touch upon. So why is it a fallacy? Well, because if there is a business sector that is doing really well and companies there are making huge profits, business people are going to see that, and they're going to take their capital to that sector and compete. And that will drive prices lower and will bring down profits. So profits don't really cause inflation. But the same thing happened. People were blaming people who gained from the currency collapse. And again, the people who gain from currency collapse are people who are not holding the currency, but are holding real assets. Of course, the people at the bottom and at the middle of the economic ladder, they always get hurt really hard. So now we're going to look at why I think we're going to have hyperinflation. And yes, we could have some deflationary, how can I say, events along the way, and we have had since '08, and every time it's happened, they've come back and started the printing presses again. So we go back to last year here in the UK, we had the gilt market meltdown when government bond prices collapsed, the pound collapsed, and it almost brought down private defined benefit pension system. So what happened then? Well, the Bank of England stepped in, the government stepped in with the Bank of England, and they saved the whole, the whole system by doing more QE. And then they told us that it was not QE and that it was just a one-off. So it's calmed down the markets, but then now we have a problem in the banking sector in the US that started out in March. We've had 4 or 5 failures. We're going to lose count of these bank failures, of course, in my opinion. And the Dodd-Frank Act was supposed to make bail-ins the way to really solve banking collapses. And why is that? Well, because after the 08-09 crisis, when they bailed out the banks, there's a bit of outrage, so they had to pass this Dodd-Frank Act to placate people and say, well, next time this happens, the depositors will lose all their funds, which is called a bail-in. The depositors with amounts over the insured FDIC amount, they will lose their deposits, so don't worry. But that didn't happen with SVB or Signature Bank or First Republic. They bailed out the rich depositors with funds, accounts over 250,000. And rich or maybe even businesses that have more than 250,000 because they need to run an operation. So instead of applying the bail-in laws, they didn't. And I think that goes to show that they're not going to let this go. They're going to keep printing. And the Fed did the same thing the Bank of England did. Even though in the last few weeks their balance sheet has come off a bit, they printed about almost 400 billion in a couple of weeks after the failure of SVB and Signature Bank. And yesterday, I saw this breaking news here, and it says, and it's from the Fed, we are prepared to address any bank liquidity pressures that may arise, committed to ensuring deposits remain safe and banks can continue to provide access to credit. And I replied to this tweet saying, well, this is the Fed saying we're prepared to do not QE again to keep the banks safe. And someone replied, Jason Burak replied, so I guess that the bail-ins that Dodd-Frank put into law are now off the table. Yes, they are. And that's what I replied. It looks like it. They realize that the 1% would be paying for it, I guess. So that's what's happening. And that's why I think eventually, and we could have a deflationary, a market crash in the next 3 to 6 months. We could have a little bit of mayhem out there, but they will come back and they will start printing. They'll start cutting rates again and trying to resuscitate the economy. And they'll make the same mistake that the French did back in the 1790s. But the final end game, and I don't know that when that will be when the currency just loses its value. People lose confidence in the currency. And how does that happen? Well, it happens that people, anytime they're paid in that currency or have some balance, they want to exchange it for something of real value. And that's when things really get bad for that currency. And that's why I've been telling people on this channel, not only on this channel since late 2015, but also to friends, family, colleagues at work, people that ask me about it since like 08 and even before, that you need to have some real money set aside to protect yourself, and that having fiat balances in the banks is a mug's game. And Yeah, there's more that makes me think that they're not going to let this go. And what is that? Well, that's the fact that they're talking about banning short selling of bank stocks. When they did that back in 2008, it was just before a crash, because if you ban short sellers, there's no one to short cover, right? And also people who own those bank stocks, they're gonna like think about it. Wow, why do they ban short selling? Something must be wrong, and they'll sell their existing shares. But I see here that the G7 finance ministers, and they're meeting, I think in a couple of days in Japan. They're talking about response, some kind of action pertaining to bank runs. So yeah, they're not going to let this go. And the only tool they have, of course, is money printing, creating reserves out of thin air, the central bank, and reliquifying, buying bonds, cutting rates, and also the government's the fiscal policy. That it's not going to go. They're not cutting back. We're seeing deficits almost in the double digits, not only in the UK but in the US. And of course, there is the debt ceiling situation. And I think that's going to make it even worse. It will be probably solved, but they're going to leave it to the last minute, and that's going to cause problems as well. And what's the solution going to be? Well, it's going to be more money printing, more government spending. And I guess some of you might say, well, they might resort to a war. Well, yeah, that could be the last resort, but hopefully they won't. So with that, let's quickly look at where the markets are this morning. It's 8:45 a.m. London time. We've got spot gold at 2024. It's up just over $3. High's been 29 and the low has been 2019. Silver is trading at 25.44. Is down 10 cents. The low has been 39 and the high's been 66. To the stock market, we got the Dow futures down 0.25% or 83 points. We got the Nasdaq down 0.25 as well, or 35 points. And the same with the S&P, it's down 10 points or 0.25%. To the currencies, sterling is down about 0.1% at 126.00. The euro is down 0.25 at 109.76. And the dollar is down 0.25 versus the yen at 134.81. The dollar is up 0.33% versus the Swiss franc at 89.23, and the dollar is up slightly versus the yuan at 693.16. Quickly look at the dollar versus the ruble. Dollar's down 0.5% at 77.30 versus the ruble. To the other currencies here, Aussie dollar is down 1/3 at 67.60. The dollar is unchanged versus the Canadian dollar, 133.81. And now to the commodities. We've got WTI crude down 1%, 72.26. Brent crude is down 1% as well at 76.07. And high-grade copper is down 1% at 3.89. And we're going to finish with the bond markets. The 2-year yield is down 3.5 basis points at 3.98. The 10-year is down 3 as well at 3.49. That's the US, of course, Treasury market. Let's look at the UK gilt market. The 2-year yield is up 4 basis points at 3.82. The 10-year is at 3.82 as well. So no difference there between the 2 and the 10. The Bank of England is expected to raise rates this week to 4.5%. I think it's on Thursday they're meeting, from 4.25 to 4.5. And the reason why I think we still have gilt yields all below 5%, despite the fact that prices are rising at double digits is because I think the investors, they know that if things start getting worse in terms of the gilt market, if we start seeing a meltdown again, the Bank of England is going to step in. So this in itself is inflationary. So there you go. With that, I'm going to wish you all a very good day. Take care. Bye.